And let's start with international news. China's economy is expected to grow 7% in the second half of this year, accelerating from the first 6 months and defying widespread expectations for a slowdown. So while China produced forecast beating growth of 6.9% in the first half, many economists and investors had expected its momentum would start to fade in the later part of the year. The slowdown has been largely predicted on 3 factors: higher borrowing costs, increasing curbs on home buying to cool soaring prices, and government-mandated shutdowns of many steel mills and other industrial plants in coming months to reduce winter air pollution. The driving force behind growth has been mainly rising household consumption. Now, China's economic growth has slowed over the past few years, but economic growth has rebounded also this year, with GDP reaching 6.9% in the first half and may achieve 7% in the second half. Moving over to London, where Brexit impact is visible on its real estate market. A new data has showed that house prices in the UK capital, traditionally one of more crisis-proof assets in the investment universe, are now falling at their fastest rate since 2009. So London houses, the prices have been impacted by Brexit, and Brexit is feared the driving away big housing buys. Kensington area, Chelsea, the prices are down by 9.4% as far as London prices are concerned. Hammersmith and Fulham, the prices at the places were down 6.1%. And the prices have cooled down 8.1% in Tower Hamlets as well. The average price of London house is now down by 2.7%. The decline has been accelerated from 0.7% in August. And in recent months, many of the global banks have started to reveal details of their plans to relocate away from London to other financial centres in Europe. Now, this is impacting the prices of housing in London, and afraid that the UK and EU won't be able to agree terms of engagement for the post-Brexit period. Many other companies are now moving from London to other financial centres of the world, including Frankfurt. The EU has refused to start talks on future trading arrangements until it sees sufficient progress on settling of UK's outstanding financial obligations to the EU. The EU's chief negotiator, Michael Barnier, said last week that talks were effectively deadlocked as bankers have traditionally set the tone for London's housing market. It is just over a week out from revelations of a cheating scandal that plunged Kobe Steel in crisis and ensnared hundreds of firms. The embattled steelmaker's shares have skidded to 5-year lows today as investors worried about the financial and legal fallout. Kobe Steel CEO Hiroya Kawasaki said about 500 companies had received its falsely certified products, more than double its earlier count, confirming widespread wrongdoing at the steelmaker. Now, shares of Japan's third biggest steelmaker hit 774 yen in the morning, lowest since 11 December 2012. No safety problems have surfaced as the Japanese steelmaker attempts to get a grip on the data tampering that it earlier said may go back as far as 10 years. The revelations over the past week rippled through supply chains across the world as companies from operators of Japan's famous bullet trains to world's biggest aircraft maker Boeing were ensnared in the scandal. And after facing declining sales, US auto major General Motors and it plans to now scale back production at an assembly plant in Detroit starting later this month as it tries to deal with declining US sedan sales. General Motors said in a statement that effective October 20, its Detroit Hamtramck plant will operate under a reduced production schedule. The statement followed reports that General Motors plans to shut the plant for about 6 weeks from mid-November and lay off about 1,500 workers, then cut production roughly 20% once operations resume. and showing signs of increasing uneasiness among top banks over encroachments on their turfs by tech titans. Barclays said it will need to defend its advantages in the payments business from technology companies including Amazon and Apple. And according to Barclays CEO, banks are very focused on payment space, and this is where the battleground of finance is fought over the next 15 years. Barclays CEO also said cybersecurity is among the top concerns for financial firms and that regulators will have to extend their reach as more companies compete in payments. Barclays CEO emotions were echoed by another top bank, JP Morgan, where its chief Daniel Pinto said banking industry needs to do a better job of sharing information and stressed the need for global standards in cybersecurity. And at a time of probability of Brexit talks hitting a deadlock, British PM has flown to Brussels today for emergency talks to rescue Brexit deal. Theresa May is travelling to Brussels for talks with European leaders amid reports that she has personally urged German Chancellor Angela Merkel to end the Brexit standoff. The meeting comes days after the President of EU Commission and Michael Barnier, EU chief negotiator, said talks about Britain leaving the EU in March 2019 or Brexit were deadlocked. And we are joined by our London Bureau Chief Mandy Clark for more on this. Good evening to you, Mandy. And first of all, I would like to know from you updates about this meeting. Any updates we have received so far, and how crucial is the meeting today?
It's very crucial. We don't have a lot of information, but right now there is a great concern that Britain will crash out of the EU without any deal, just because they simply can't decide on that divorce bill. They can't agree on what commitments they do have to the EU, and so it is crucial that they start this ball rolling. Most people recognize, except for the far right, what are known as Brexiteers, people who champion Brexit, that without a deal, Britain will suffer massive economically, and that's looking more and more likely. When it first started, it looked like they could start negotiations, but it's just been dragging on for so long. It's a very real concern, and that's why it was so crucial to get to Brussels to really get these talks moving.
And Wendy, how much of concern is there in London, especially among corporates, because any problem with the Brexit deal will lead to further fall or dip in the UK's economy, which is already going through a bad phase. So what kind of concerns have been raised so far on UK's economy?
There's mass concern, especially when it comes to business and the finance sectors. With this growing uncertainty, a very unclear path, and the opposite was really promised. You know, when Theresa May said that the Brexit was going to go ahead, they made it very clear they wanted a lot of clarity so business wouldn't be nervous, but all that business has received is miscommunications and uncertainty. So growing uncertainty will only be damaging for the economy, and we're seeing people not hiring because they just don't know what's going to happen if the deals are going to go ahead, and they're looking elsewhere. They are looking to continental Europe to move headquarters because there's greater certainty of what will happen. So it is bad news for the economy and business and, of course, the financial sector.
All right, thank you, Mandy, for talking us all. And its latest strike in a legal war between the two tech companies, which started out in the US and has since expanded worldwide. Qualcomm has launched a new lawsuit against Apple. Apple has asked a Chinese court to block the sale and manufacturing of iPhones within China. And Qualcomm and Apple, the legal battle is intensifying. Qualcomm is seeking to ban Apple in China. The Apple defense, however, Apple has defended itself against Qualcomm lawsuit, and Apple said that Qualcomm claims are meritless and they would fail as well. And Apple also said that the effort was opportunistic as far as Qualcomm is concerned. Reports say in its lawsuit, Qualcomm reportedly claims that Apple is in violation of 3 patents, none of which are essential to any industry standards, meaning Qualcomm is not obliged to license them. This is Qualcomm's second attempt to get a ban on iPhone sales. In July, it filed a similar claim in the US, pointing to 6 patents that it said Apple was in violation of. The legal battle between Qualcomm and Apple kicked off in January this year when Apple filed a lawsuit claiming that Qualcomm was holding payments for ransom. The filing was prompted by a lawsuit from the Federal Trade Commission, which claimed that Qualcomm was abusing its market position to get more money when selling its smartphone modems. Since it's by far the dominant supplier, Apple has proceeded to file suits making similar claims around the globe, and Qualcomm fired back in various places contending patent infringement. And let's move over to India, where as a part of its plan to move and give more opportunities for women in its workforce, steel major Tata Steel, now it's targeting to have 20% women in its workforce by 2020. The current level of women in workforce is 11%. So Tata Steel is now targeting 20% women in workforce by 2020. Currently the number is 11%. So in the next 3 years, around 9% more women will be hired. Tata Steel said that availability of women is gradually improving as far as technical knowledge is concerned. And that's why it will be easier for them to go and hire more and more women going forward. It is also going to have a diverse view of people as far as hiring and balancing of hiring is concerned. And at a time questions are being raised on the performance of Indian economy, India has called for urgent revision of quota of International Monetary Fund or IMF in favor of dynamic emerging market so as to reflect the ground realities of the world. India has called for urgent revision of IMF quota. IMF needs to be adequately resourced. Arun Jaitley, Finance Minister of India, has said the near-term global financial stability has been strengthened so far. That's what IMF needs to check. And recovery in global growth and monetary conditions are supportive. And that's why this call needs to be taken, FM of India, Arun Jaitley has said. And some banks continue to grapple with legacy problems, FM has clarified. And Finance Minister Jaitley hoped that this can be accomplished as part of 15th General Review of Quotas. Jaitley said the risks to global financial and economic stability have significant implications for IMF's operations. He also said IMF needs to be adequately resourced to meet these demands while functioning as a strong quota-based institution.
And meticulously pursued and implemented. This is directly there for you. Thank you for releasing it.
And German auto major Volkswagen has set a target to garner 3% share in Indian passenger vehicle market, one of its key future segments. According to a senior company official, company is looking to enhance its brand awareness while also gradually strengthening its range of products in India to fill gaps in its portfolio and tap the fast-growing segments of Indian car market. At present, Volkswagen has a market share of just around 1.5% in the country. In the fiscal ended March 2017, passenger vehicles sales in India stood at around 3 million against 2.7 million last year. Volkswagen is constantly filling gaps in the product portfolio. There is also interesting segments that are coming up in areas where Volkswagen is also interested. And it said it is looking into that. Staying with India news, at a time Indian economy is going through a challenging phase and banks are suffering through bad loan problems, Finance Minister is working on capital infusion strategy, which is new for the public sector banks or PSBs. The strategy is expected to be finalized by the end of current year. Reports say various parameters which are being looked at for capital infusion include NPA ratio, credit growth, insolvency proceedings, etc. Also, various factors are being considered before arriving at the exact number, and the final output is likely by next month or December. Besides providing capital for meeting regulatory requirements, the ministry is looking at providing capital to performing state-run banks to boost credit disbursement. Now, one of the options on the table is issuance of capitalization bond for meeting the capital needs, but no final decision has been taken yet. And in signs of some relief for wholesale and eventually consumption of consumer goods, Indian wholesale inflation rate or WPI has fallen in September. The wholesale price inflation measured as WPI is a marker for price improvements in bulk buys for traders and broadly mirrors trends in shop and prices. So the wholesale price inflation rate has cooled down in September. The WPI grew at 2.6%. Inflation was down from 3.24%, which rose in August. And the food inflation index is down to 1.99% from 4.41%. The retail inflation has remained flat at 3.28% in September. And RBI has forecasted the retail inflation will be around 4.2 to 4.6% in October to March period. And gold import in India has eased in the month of September. Gold import, which has a bearing on country's current account deficit or CAD, was worth $6.88 billion in April to September period, which means first half of the year. However, the import of metal is expected to increase on account of festival season, which has started this month. Now, worried over the surge in gold imports from South Korea, which India has a free trade agreement, government has restricted inbound shipments of precious metal. So India gold imports have surged twofold. Gold imports have touched $6.88 billion in first half of the year. The gold imports impacts current account deficit of the country, and that's why it has come down in September. India's trade deficit was down to a 7-month low in September. That is also impacted by gold imports. The gold imports were down by 5% in September to $1.7 billion. And India is the world's second biggest gold market after China. Import mainly take care of demand of jewelry industry. At present, gold import attracts 10% duty. The gems and jewelry industry, along with Commerce Ministry, have time and again urged Finance Ministry to consider a cut in the import duty. And let's talk about Indian markets that have actually hit a record high today, and they were hit by, we can say that festival cheer is boosting markets. Sensex was up more than 200 points and Nifty was also, it closed up over 10,200 points. So that is the big, we can say that good news for Indian markets. And to talk more on markets, we are joined by Mr. A.K. Prabhakar, Head of Research, IDBI Capital. Good evening to you, Mr. Prabhakar. First of all, we would like to ask your opinion. What were the reasons why the markets were behaving this way today? Is it only the festival impact, or is there some other reason behind this?
No, Diwali is coming. Normally, Indian market moves higher and makes the all-time high towards Diwali. That is what we have seen. Now it is a festival cheer, and even datas are coming good. Automobile datas have come good. IAP datas have come good. Results have not disappointed. Reliance result was fantastic result from Reliance. So even IT results, there is a margin expansion. The top line has grown. So all round, everything is supporting market this time. There was a growing pessimism that results will not be up to the mark, and growth has slowed down. But things are panning out slightly different. So that is where market is finding its feet.
And what is, we can say that giving support to global markets? They are also doing well. Yesterday also, US markets have closed at record highs. Today, Asian markets were touching 10-year highs. So what is reason for the boost as far as global markets are concerned?
See, global market has been in a mega bull rally. At least Indian market has not performed to that extent. We have underperformed the global market. So we need to catch up with the global market. But global market, there is a fear that interest rate will not be high. So you have no other option but to get into equity. Equity is the only safe haven now, and other asset classes are not performing. So global equity is likely to rally. India, which has seen underperformance, will see outperformance very soon.
So do you now expect the bull run to continue for at least a few more days till the time the festival season isn't over?
Yeah, see, this bull market, it will have more rally. Now, maybe till Diwali or post Diwali, the rally might take, some profit booking can emerge. And I think by December of this year, 11,000 is possible in Nifty.
Mr. Prabhakar, any sectors that are at the top of your radar as far as buying is concerned, and any sector in which you recommend the investors to really move out from?
IT has shown a very good result. We have had Cyient, TCS, and today Persistent, where margins have improved. So I think IT is one sector which is likely to outperform. Underperformance will come from housing finance companies. They have run up too much, and at these levels, caution is advised in housing finance.
All right, thank you, Mr. Prabhakar, for getting us all these details. Well, that's all today we have in this edition of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.